Welcome back to day two. I hope that you guys have been enjoying the other sessions and have been enjoying some of the awesome speakers. I think there have definitely been a lot of great speakers that have stepped on the stages and have really provided a lot of context and a lot of great insight. And so what I will say about this session is there are a lot of different things that we can cover. There are a lot of different things to cover. And one of the things that I think we should really keep in mind is that this session is really about providing you with the best insight possible. And I think the best way to do that, to provide you with that insight and to provide you with the tips and the ideas of the things that you need is really for you to get engaged and to ask questions. Because I think if you're asking questions, then you are really going to get the things that matter to you. And especially when it comes down to telling your financial story. When you're telling your financial story, you definitely want to make sure that you make it your story. Because one of the things that I have realized when talking to so many different business owners is that they have spent a lot of time telling a story about a business. But then once you start to really dig in and you look at the details and you really look at the numbers behind their business, you start realizing your numbers are telling a completely different story than what you have been telling us in your presentations and in your conversations. So I always say is when it comes down to telling the financial story of your business, you want to make sure that it really is your story that you're telling, because a smart investor will be able to do some research and be able to understand, does your business really live up to the things that you have said in your presentations or the things that you have shared publicly or in private conversations? So you want to make sure that you're really internalizing that. And one way to do that, I think, is to really ask your questions. So as we go through this session, if there is something that you have a question about, ask that question. Now, one of the things that I'm going to do is we're going to revisit a little bit of the terms that we covered yesterday. So if you missed the presentation that I did yesterday, where we talked about some key financial terms that you want to make sure that you're aware of, I'm going to do a brief recap on that. And then what I really want to do is I want to go through a framework of how you can tell your story. And what you can do is you can take that framework and start thinking through your own business story. And I'm telling you that time and time again, I've used that framework and it has helped, my business. It has helped other businesses. I've used that same framework when I work with Fortune 500 companies, and that framework will help you. And then what I'm going to wrap it up is not only the framework, I'm going to walk through an actual example and explain how I would pitch my business and how I would use that framework to tell my own story. So for those of you that weren't able to tune in yesterday, my background is accounting and finance. I'm the founder of the TL Turner Group, which is an accounting and CFO firm. We support small businesses and medium-sized businesses with, the simple things like, bookkeeping, making sure that people understand their numbers. And then on the CFO side, we do a lot more strategic advanced work where we're working with business owners, helping them understand how do they communicate that information to other people. Like some of the things that we've done is working with clients that have looked to raise capital. Some of our clients have raised about $2 million in funding from third-party investors. And part of that was being able to craft their story and being able to communicate that to the person that they're talking to. Some of the other things that we do are digging into some of the details where there may be someone that has invested in a business already that then contacts us and says, hey, we'd like you to take a look at this. We want to understand, do the numbers line up with the information that they're telling us? And so then it's digging into the numbers and really figuring out what's going on and then providing them with the insight that they need. Now, outside of, I would say in the firm in 2021, our firm was recognized in the New York Times as there was an article that was done on top 100 Black-owned businesses across the US that you would love. And our firm was the only accounting firm that was represented in that article by the New York Times. In 2021 was also named a 40 under 40 Black CPA, a award recognized among all the Black CPAs throughout the US. So a huge honor there with that award. And outside of that, one of the things that we realize is that, there's a certain level of capacity when you're running a service business. So we may not be able to take everyone on as a client. So one of the things that we do a lot of is we provide a lot of free content. There's some paid content as well through our media company called the Business Talk Library. My wife's background, she is a finance executive with a Fortune 500 company. We work in the business together, as well as having other partners in the business, that we create a lot of great content where we talk about topics that we have learned from rooms that we have been in and things that other people should know to prepare them to be able to move to the next level. So we have a ton of podcasts, ton of YouTube shows. We create a lot of content, and I travel around and I do different speaking engagements. I mean, in the past 2 years, a lot of it's been virtual, but we also do some in-person speaking engagements and trainings. And because our passion is really about how do we help simplify accounting and finance and help business owners actually make sense of it. Now, one of the ways of doing that is being able to effectively tell your story. So as a recap from yesterday, here are the major terms that we went through yesterday. Now, the way that I would think about, the terms as it relates to investing, please understand there are a lot more terms that when it comes down to finances, and depending on the specific type of business, some of the terms may be more relevant than others to you. But what I really wanted to do is really point out these are some major terms that come up in conversations when you are talking about investments or bringing on investors. These are more than likely some very, very, very common terms you're going to hear. And the way that I think through this is, you're going to hear about these different roles or these different people, different categories there. You're going to also hear about different concepts. Now, these concepts are really going to come into play when investors are trying to think through the strategy. Like, is this investment is giving you money, is putting money in your business? Does it fit into their overall strategy? And the concepts are some of the things that they're going to look at on that. Now, the terms are going to be common terms that I think that you probably should have and speak to or either reference as you are telling your story. So this is information that you should be providing. And these common areas, and most of these are common financial metrics that you want to make sure that your presentation and that your communication to the potential investors, it includes these items, because people really need to understand these to really grasp, is your business a good investment for them or not? Now, one of the things that I said yesterday that I wanted to make sure that I came back to and talked a little bit more on was the concept of valuation. Now, what the term valuation means, it is, and I guess just some technical definition that may define it as, this is the hypothetical value of your business. So what this says is, if you sold your business today, if you sold 100% of your business, what is the likely price that you would get for your business? Is, in a simple term, that's what valuation is how much is your business worth? Now, when it comes to investing, a lot of times investors are thinking through this depending on how much money you ask for. They're kind of doing the math. For example, if you said, hey, I wanted to bring on an investor for $100,000 and they're going to get 50% of the business. So by simply doing the math, I know if $100,000 buys me 50% of your business, then the entire business is worth $200,000. And that's kind of how the valuation concept. So when someone asks you a question like, how much money are you looking for an investor to put into your business? Then the next question will be, okay, how much of your business are they going to own? Whereas if you came back and said, I want them to put $100,000 in and they're going to only own 10%, then your valuation of your business is really 100,000 divided by 10%. And so that's how you start to understand valuation. Now, one of the most common ways that you really see about this or you hear about this is if you've ever watched anything with stock markets where they say that something has a market cap of X, or this company, this entire company is worth this, which they're taking all of the shares that are outstanding times whatever the current price is. So that's this concept of valuation. Now, the reason why that becomes important is because an investor that you are talking to, one of the things that they are trying to understand as they are listening to your presentation is your business really worth the value that you are putting on it? And they're trying to understand, can they follow the math in your numbers? And so the other concept that becomes very important from is the multiple concept, and then on the terms, the EBITDA. So most people, the way they're going to calculate, if you're a small business, the way they're going to understand how much is your business worth is they're going to look and say EBITDA, which is your earnings before depreciation, interest, and taxes and amortization. So pretty much what you're trying to see is, okay, when I take what you sell, your revenue minus your direct cost and your operating costs, like what does your operating profit for your business look like? And then what they're going to do is they're going to take that number and multiply it by some type of factor. And whatever that math comes out to, so they'll say, let's say if your multiple is a 6, they'll take your operating profit, multiply it by 6, and in their mind, they are believing your business is only worth what this math equation tells me. And so as a business owner, when you are talking to investors, one of the things you want to keep in mind is mathematically, if they were to calculate what my business is worth, you want to make sure you understand that. Now, if you believe your business is worth more, then we need to make sure that you have certain things presented in your presentation to explain to them why you think your business is worth more. And one of the most common areas that, if you've ever seen the show Shark Tank, one of the things that trips up a ton of people who go on Shark Tank, and I've talked to several contestants that have gone on to Shark Tank. I've actually, in one of the podcasts that I host, I've had a couple of guests on my show that were on Shark Tank, and we talked about, what that experience was like. We talked about how their pitch went. And one of the things that they consistently told me is when they got to the financial section, that's when everything fell apart. Because they could not substantiate that part of their presentation, they lost the interest of all the sharks. And if you've ever seen the show, you usually see that's when people start to fall apart. And one of those areas where you'll see someone that says, we're looking for an investor to put $100,000 in, and they're going to get, 2%, some ridiculous number like that. The immediate thing after they say that, what you see all of the sharks doing is they're doing a little math on their sheet of paper and they're calculating. So if you're asking for 100,000 and I'm only going to get 2% of the business, they're backing into the math of saying, oh, you believe your business is worth X? Like then the rest of the presentation, they are trying to understand, is this business really worth that? And so that's where they get into that discussion back and forth. Well, I'll give you the 100,000, but I want 20% or I want 30% of the business. All of that comes down to valuation and multiple. And if you are going to bring on investors, you want to make sure you understand how that math and those concepts work. So the next part I want to really dive into is when it comes down to telling your story. Before you are ready to tell your story, one of the key things that you have to be able to articulate to yourself. You may not necessarily have to articulate this to others, but you want to make sure that you can articulate this to yourself is, what is your goal? Like, what are you really trying to achieve? Because there are so many times that I come across different business owners that are trying to explain, or they're trying to pitch their business. And before they pitch their business, I'm asking them, what does success look like for you? So you're going to go pitch your business to this investor. What would a successful outcome look like? And most of the time, they don't really have an answer. And so I always say is, you want to make sure that you have clarity on what is your goal? What are you trying to achieve by having this conversation with this investor? Maybe it's you just want to get some insight. You want to get a third party, unbiased perspective on what they think about your business. Maybe you just want to develop a relationship, or maybe you do want them to invest in your business. You want to make sure that you understand what your goal is before you start having that conversation. The other piece that I think a lot of people overlook, and this is probably, I would say entrepreneurs are probably the worst at this. It is understanding the investor's goal, because not all investors invest for the same reason. And if you are trying to trying to present your business in a way that will attract the attention of an investor, I will definitely tell you, if you don't understand what their goal is or what's important to them, there is no way that, or maybe there's maybe by sheer luck, you might be able to say something that attracts their attention. But if you actually take the time to do a little bit of homework, and of course, depending on who the investor is, you may have access to a lot of information, or you may have access to limited information. But if you do some homework on the person that you are pitching to, what you will start to understand is what is important to them. And what you want to make sure you do is that you start, I guess you would say, adjusting or tweaking your presentation to make sure that when you have a conversation with them, you talk about the things that they appreciate, the things that they understand, or the things that they care about. For example, when it comes down to, pitching to an investor, if an investor really, their top priority is, I want to support social equity. I'm really looking for business owners that are in a market and that are Black and brown business owners. Now, if that is one of their highest priorities, then one of the things that you want to probably talk about is, what is the impact that your business is having on the Black and brown community? How many people in your leadership fall into that category? Now, you'll still talk about all the other things in your business, but you don't want to lose sight of what is important to the audience that I'm communicating to. Because what ends up happening is, a lot of people get excited about their business and what they think about their business, and then they just blurt out everything that's important to them, and they completely forget to think from the perspective of the person that I want to actually give me some money. Like, they're going to put their finances at risk for my idea. And so you want to make sure you're thinking through that. And as a quick rule, here's a quick short list of some of the most common types of goals that an investor would have. Some of those may be, an investor may be looking to do a flip. Now, what a flip means is the investor is looking to buy at one price, hold it for a period of time, and then resell the investment at a higher price. That's what in simple terms, that's what we would call a flip. And so with that, an investor is hoping that whatever I buy whatever I buy my ownership at today, that the value of your business is going to grow over time, and then I can resell it for a profit to someone else. Another one is social equity, where there are some investors who are very targeted to where they're saying like, hey, I want to invest in businesses in specific communities, or businesses that are started by very specific social economic groups. Now, they still expect the business to be sound. And I always tell business owners and entrepreneurs that you're not just going to get investment because you're a black and brown business. You still have to have a pretty sound business, because if a person's investing, for the most part, they're going to be able to kind of understand whether your business is really sound. And then there are some who invest for residual value. Typically, that's not the most common. And what residual cash flow and residual value means is that the business is so profitable that they're going to get a percent of the profits on a regular basis. For a lot of early stage and hyper growth companies, that's usually not the case. Usually they're looking at it from the perspective of the flip. And then there are other cases where the investor wants to invest in the business for the sake of product synergy, meaning you created a product that is very similar to or compatible with another product that they own. So they're looking at ways of how do you get synergies from owning a part of your business, of combining the products or the services. So though now there are other motivators why an investor would invest, but these are some common ones. So now to the probably the core of why you guys showed up is being able to tell the story. Now, one of the ways that I think about it is that we are very, very familiar with telling stories. And I would say, Mary, I haven't forgotten about your question about a book recommendation. I will definitely come back to that one. But when it comes down to telling a story, the thing that we have to think through is that we are very, very familiar with hearing stories. Now, as people, we are constantly inundated with stories. If you think about your favorite movie, or if you think about your favorite book, the most of the time it is something about that story that you connect with. So when you are telling the financial story of your business, you almost kind of want to think about your favorite movie. And if you really break it down, you'll start to understand that, you know what, the plot is really kind of what tends to attract you. Now, if you think about a movie that you've seen that you really like, where let's say you saw the preview for the movie, typically in that very, very short preview, the goal is to give you an idea of the plot of the movie and introduce you to a few of the main characters to attract your attention enough to want to come and invest the time to see the entire movie. Now, when it comes down to telling your financial story, what I always tell people is think of it kind of like most of the time it's going to be about the length of a little longer than a movie preview. And there are some key things that you want to make sure that you cover and that you touch on, that you attract enough interest from the right investors to be able to then have a further, more detailed conversation about whether they are going to invest or not. Now, the first part about it is when you think about a story, is this going to be what is the main point? So when you think about your business and you're talking about your business, a lot of times people just jump in and they talk about their product and how cool their product is, how great their product is. I'm going to be straightforward with you. No one really cares. What they really care about is what problem is your product solving and who are the customers that have that problem. Because you can have a very, very great product, but if your product doesn't really solve a problem that matters to paying customers, then you really don't have that impressive of a business. You may have a very, very, very sophisticated product, but what really matters is, does your product solve a problem that is relevant to paying customers? The next part about your story is you really want to understand, okay, how big is the problem that you are solving? Like, how big is this scenario and this issue and this thing that has come up? Because this one, in the business sense, it translates into what is the market size of the potential customers that you are actually targeting. Now, when you think about the market size, you really want to kind of understand, like, you know, how many people actually have this problem. Now, one of the ways that a lot of people tend to get this confused is they tend to just think about, you know, how many people are related to this. And one of the obvious, I would say probably most obvious, is when I talk to entrepreneurs in the automotive and transportation space. Whereas a lot of entrepreneurs will create this product that is relevant for automobile passenger automobiles, and they'll say, well, there are X number of drivers in the country, so our market size is X. Now, if you're a sophisticated investor, you're probably realizing that, okay, there may be, let's say, make up a number, 120,000 drivers in the country, but not all of them really want your product. So what I really want to understand are, what is the market size of the people who are most likely, or who are likely, or even remote likely to actually buy your product? Because that tells me how big this problem really is that you are trying to solve. The next piece of it is, you really want to understand, it's just kind of like, what does the path to success look like? Now, one of the things that I tell people is that when it comes down to watching a movie, the part about the movie that becomes the most exciting is the story that happens in the middle. So you get an idea of, at the beginning, the introduction that happens, you get some context about what's going on. And then there's all of this stuff that happens in the middle. There are, opportunities, challenges. There are different decisions that need to be made. There are different things that you need to work around. That is the part of your story that you want to make sure that you can help your potential investors understand. I told you the main point, the problem that we are solving for paying customers. I've told you how many customers, or an estimate of how many customers have this problem that we could potentially sell our product to. Now, in the path of success is, these are the things that we are going to do to be able to actually solve this problem for customers. Now, how you go to execute has a very, very, very big impact on whether or not that investor is going to have confidence in putting money in your business. And if we go back to yesterday, we talked about the definition of an investor is someone who is willing to take their own money, or money that they are responsible for managing, and they're willing to put that money at risk because they believe in your business and they believe in your ability to actually execute to achieve a goal that they care about. So if you are going to be able to communicate to an investor, hey, not only do I have the potential, do we have a solution that customers are willing to buy? The market size is big enough, and we actually have a plan and a path to be able to achieve that. And that's where you really start to reel in an investor's confidence level. Then the thing of every movie that we all have seen, and you've probably seen a movie before where the movie just kind of ends, there's really no resolution to it. And you always kind of walk away from movies like that and you say, you know what? There was something missing about that. And that becomes a common thing with a lot of people who are pitching their financial story and telling the story of their business, is what they forget to do is they forget to either give people a update of, hey, here's where we currently are in the business, or they forget to paint a picture of what success will look like. Again, this kind of ties back to when we talked about, before you pitch the story of your business, you want to make sure you understand, what is your goal? What's your goal of the pitch? And what is your goal for the overall business? And one of the things that you want to make sure that you paint for an investor is, you want to be able to help them understand, hey, when we achieve the thing that we are trying to do, here's what that will look like. Now, this is an area where I do think, going back to some of the financial terms and some of the financial metrics, this is where you're probably going to see a lot of that come in more. Because one example may be is, as you're talking about, your business, you're talking about the growth, the success of your business is, our plan is to achieve X amount of dollars in revenue by, year number 3 of being in business. Because what that does is, it gives the investor a lot more comfort in knowing that you are actually intelligently thinking about your business. Whereas a lot of people from different presentations that I've heard, the way they usually wrap this up is we're going to be the number one business in such and such industry. And one of the very first questions that comes to mind for an investor is, well, what does number one look like? Like, I don't really know what that means. And if you don't paint the picture, what tends to happen is the investor is going to paint their own picture. And that's one of the worst things that you can have, because I remember when I was working for a Fortune 500 company, and it was a company that was doing, north of 14 billion in annual revenue. And there were some conversations that we were having with some of the analysts. And it was during a time where the company had just fired their last CEO, and they were bringing in an interim CEO. And I remember being in a conversation with that CEO. And one of the things that he pointed out to me, he said, from his experience of working with Wall Street analysts, one of the biggest shortcomings that a lot of CEOs have is they'll talk about all these great ideas, all these great things they want to do with the business, but they don't take the time to actually help investors understand this is what success looks like. Because if you don't paint that picture for them, they're going to create their own picture. And when they create their own picture, more than likely, you're going to be in kind of a losing battle, because now you're trying to hit a target that you probably don't even know exists. And so when it comes down to communicating with your investors, what you want to make sure that you do is you paint the picture of how great this business is, what the opportunity looks like. You paint the picture of the potential challenges, but then you also want to make sure that you come back and you tell them, hey, when we work through these challenges and we pursue these opportunities, here's what the outcome is going to look like. Or, hey, here's what the outcome currently looks like. And that way it gives it allows you and the investor to be on the same page. Because one of the things that you will realize is as you start to bring on investors, going back to some of the terms we talked about yesterday of with board members and oversight, whereas a lot of times when you bring on an investor, they're going to want either regular updates, or maybe they're going to want a seat on your board of directors. And what your board of directors are there for is they are there to provide advice, and they are there to provide insight and oversight to the senior executives. So if you're the founder of a business and you have a board, your board is there to understand, hey, what's going on, and have strategic conversations with you. Now, when you are bringing on investors, sometimes that board structure is formal, sometimes it's informal. But if you bring on investors, they are going to want some type of updates on a regular basis for you. And what you don't want to do is you don't want to make that a bad relationship, because they expect you to be doing X and you are actually aiming to do Y. Because what that eventually does is it creates a very contentious relationship between you and your investors. And one of the things that you don't want is you don't want to create a contentious relationship, because depending on how much of your business they own, then you see stories where, a founder who started a business ends up getting voted off as the CEO, or there starts to be tension in the business, or the business stops growing because there just isn't congruency in that structure. So one of the things that you want to make sure that you're doing is that you're being very clear about, hey, this is what success looks like for the business. Now, the truth is, when you lay that out, the idea is you are trying to find an investor that actually resonates with your story. Because where you do have to be very mindful and of not falling into the trap of trying to just get every investor you possibly can because you love the idea and that you're taking money from everyone. I always tell every entrepreneur, every business owner, all of the ones that I work with is when you are thinking about, bringing on investors in your business, you want to make sure that this is the right investor that you want to bring into your business. Going back to the goals, when you understand what your goal is for your business and you understand what their goal is for their investment strategy, then you can see, does this really align? Because there have been some situations where there have been some business owners who have come to me and said, hey, I have this other business on this person who wants to invest $500,000 in my business. It will allow me to do this. It will allow me to do this and this and this. And after doing some due diligence and some homework and having a conversation with that potential investor, I came back to that business owner and said, I don't think you should take their money. And part of that came down to really understanding I knew what the business owner wanted to do with their business. And then after talking to the potential investor, what their goal and their agenda was completely incompatible with what the business owner wanted to do. So although there was some interest of an investor wanting to put money into their business, if we went back to the investor story and I said, hey, let's go back to how you told the story of your business, the problem that you solve, the problem that you care about as the business owner, and we talked about what your picture of success looked like. When I compared their picture of success to what the investor had in mind as the picture of success, I said, this is not compatible. If you did take their money, then this is going to be a very contentious, uncomfortable relationship. And I doubt that you will be able to actually execute to grow the business. So you want to make sure that you are keeping that in mind. Now, something else I wanted to also go back to is I want to go back to when we talked about the market size. Now, for a lot of businesses that are looking to get investment, one of the things that I see them get tripped up a lot on is that they start to think of their market size in very broad terms. And what ends up happening is that they don't really get specific enough. So they start creating unrealistic expectations in the minds of investors. For example, if we create a application that allows people to manage the scheduled maintenance for their vehicles, and let's say if we create that application and we say, there are 100 million vehicles in the country, that's our market size. Well, you really have to take a step back and ask yourself, okay, all right, how many of those drivers actually take their car to get maintenance on a regular basis? Well, that's probably not 100 million people. That's probably some smaller number. And then you also have to ask yourself a question of, okay, all right, how many of those people, what percentage of those people actually utilize technology for things like this? Then that number gets a little bit smaller. Now, what that starts to do is it starts to give you a sober perspective of what does your market size really look like? Because if you brought on, and let's say you attracted the attention of an investor and they believe your market's in people, but your real market size is something like maybe 30 million people, they are expecting you to grow faster than you probably ever will grow, which is just going to create problems for you on the back end when it comes down to how you run and execute in your business. So you want to make sure that, like I said, you are defining what you believe the picture looks like for your business. Because again, when it comes down to telling the story of your business and it comes down to pitching the financial story that you are telling about your business, you are the author of that story. Now, yes, you will have to take into account some things in reality, like, the price of your product, the market constraints that you have, and also the size of your market. You do have to take those things into consideration. But at the same time, you want to make sure that you are thinking about your story from the context of, hey, I am now painting a picture of what my business looks like, and now what my business could look like, and what I think the business is going to look like 2, 3, 5, 10 years from now. You are the artist that is painting that picture. And what you want to make sure that you are painting that picture in a way that speaks to your core objectives and a way that speaks to what that investor may value. So I want to go through an example of this. So I'll use a real example of my business where I filled in some of the things about my business. As I said, I run a accounting and finance firm, the TL Turner Group, and we provide bookkeeping and CFO services for law firms is one of the big segments that we target. So if I wanted to say what's the main point, the main point is that law firms often struggle to grow their business and to become more profitable because they just don't understand the financial side of their business. And our business is we provide understanding, we help them figure that out, and we provide the financial support they need to get a better understanding of that part of their business. That is the main point of what we do. I didn't really talk about, all the technical stuff that we do. I talked about the problem that we solve. I talked about who has the problem. And then I just reiterated, we can solve that problem. Now, next, you want to understand, okay, how big is this problem? Well, currently, there are 441,000 law firms in the US. But in doing further research, about 54% of them express that they feel pretty comfortable in understanding the financial side of their business. So what that tells me is the other 46 is my real market size. Because yes, we may pick up some clients that feel like they understand it, but my real target is going to be the 46% that do not feel comfortable that they understand their financial side of their business. And then when I talk about, okay, what's the process? How is that journey going to look? Well, the way that journey is going to look is we provide multi-tier, we provide different service packages to meet the needs of different types of accountants. We also provide custom reporting that we can sell as well to our target market. That is the process of that is what we are going to do in the execution stage. Now, what the resolution looks like for me, because I'm already in business, I can give a little bit of a status update and I can tell you how the journey's going. So what I will say is that so far, we're currently working with about 30 different law firms. We have a historical trend of onboarding 2 new law firms every month at about a average annual revenue, average recurring revenue, meaning this revenue is long-term contracts, meaning it's going to come in every year at about $18,000 per new client. And our net profit margin is about 22%. Based on this short pitch or this short story, you now understand, if you are an investor, you would understand all of the major things about my business enough for you to decide, is this interesting enough for me to want to know more? Is this interesting enough for me to want to dig in a little bit more? And the truth of the matter is, it didn't take me very long to explain all of this. Now, of course, if I wasn't actually, trying to talk you through the example, I probably would have got through these four elements much faster. But the idea is that when you're talking to potential investors, what you want to make sure, like I said, that you are able to do is paint the picture of your business, give them the main point, tell them how big the problem is. You also want to look and understand, hey, what is that journey? What is that process? How are you going to go about solving this problem? And then the last thing is you want to make sure that you give them some type of resolution and paint for them how the solution or how the success is really going to look. Now, I appreciate you guys for coming back for a second session and telling your financial story. As I said, I am constantly doing different shows. We create different content, and do want to say thank you so much for tuning into this session and enjoy the rest of the sessions for this conference. There's some awesome speakers that are coming up. There are, a ton of great things for you to learn and continue moving down your journey. And this has been Telling Your Story. Thank you so much for tuning in.